take time. You call it public-private. It may end up being more of public than private. But some projects, I'm made to understand, are being undertaken under the PPP. But the financing options that you have, you need a mix of options. You can't just rely on one. Okay. And let me also say that as part of the budgetary allocation for the year, the capital budget, if you build in infrastructure needs into that budget, and the House approves the budget, and the President assents to the appropriation bill, you now have at least some money to jumpstart what you want to do. And let's make the point that even for you have to prepare your infrastructural needs for it to be attractive to investors. Even preparing the documentation itself is very expensive. So it's not just building of the railway.
How long is that going to take? Because
it takes time, but you have to be seen to have started. You can't start a railway, a rail line today and complete the next year or next year. Some of this it takes, like a power plant project, 3 to 5 years. So it means that for each year you have to be guaranteed that there's a flow of funds. Okay. There's some financing options could be from multilateral institutions. Okay. For example, we are told that the railway and the road going from Lagos to the border has the World Bank financing. So it's a mix. Okay. You don't have one size fit all.
Okay. Let's get back to Dr. Eseowe in Abuja. There are concerns that Nigeria could face tight lending capacity as well as increasing fiscal constraints, as it plans to raise funds for infrastructure financing. How do you think these concerns can be handled?
Can I get a question again? It's brief.
So there are concerns that while Nigeria is planning to raise funds from the international bond market, the Central Bank of Nigeria's governor was quoted as saying that the market is liquid. That means we have a lot of money to take from the marketplace. There are concerns, however, that there could be tight fiscal constraints in that regard. How do you think we can balance these issues in order to go ahead to get the funds needed to finance Nigeria's infrastructure needs?
I'm afraid I can't hear it. Can you come again? It's actually quite bad. I can barely hear.
Okay, perhaps we have to get back to Dr. Eseowe just in a moment. Let's move back to the studio while we try to sort out that audio condition. Dr. Owe, I was trying to, Professor Ekpo, I was trying to ask Dr. Owe, what can be done to balance the issues of tight fiscal constraints we face on a yearly basis? Don't forget, we still have to finance our budget deficit and all that. And if you have to go ahead to the international market to raise money, how do we balance these issues not to, so that it doesn't become a burden for us?
Well, it's a kind of priority. We have tight fiscal, as you said, because of how do we reduce our spending pattern. If you want to still sustain what I call fiscal rascality, then you're going to have a problem. So it's kind of priority. If you feel that infrastructure is of priority, and then you reduce the other things that you are doing that are not of urgent need, okay, and that is debatable in another session. But I was argued that if you look at our debt GDP ratio, okay, it allows us enough space for us to borrow because we've not reached the threshold. But that doesn't mean that you have to keep borrowing when your debt profile is still rising. So, in my view, that I don't see the sense in savings, okay, when you need that money to develop infrastructure that has multiplying effect on the economy. So why not reduce drastically your savings for now and invest that portion?
You mean savings into the excess accrued account?
Into the sovereign wealth fund.
Okay.
Yes.
Sovereign wealth fund and excess accrued account.
Yes, exactly. Use that to build infrastructure.
Well, we've been told severally that we need those backups. They're actually backups for Nigeria's economic growth. You
need the backup, but what is your... See, infrastructure deficit now is so huge that if you invest on that, the multiplier effect is enormous. You generate a lot of employment and so on and so forth. So what's the point keeping the money and being managed even by foreign banks? So why not use most of that money to build infrastructure? Because when you keep borrowing, you are indebting future generation unnecessarily. So if you don't have the money then I can see the need to borrow. Or you do a mix, you know. So I think most of the money going to excess crude account was very well fund. So a large part of it should go to develop infrastructure.
Okay,
Yes.
so there were some scenarios at the Senate and House of Assembly
Yes.
of recent where there were stories that Nigeria seems to be broke, there's no cash flow, and then all of those things.
Yeah.
Is that a good signal?
Well, for me, I don't think
To
Nigeria,
us,
I don't
because-
think Nigeria is broke. See, a country is broke. If you're broke, you need a bailout. We're not Spain yet, but you can have some cash problems because of the bureaucracy or your dependence that the flow is not coming in the way you expected. But if the cash trap continues for a long time, it becomes a problem. So we
We've
have
been
to
having issues with remittance from the
Yes.
NNPC
Yeah, yes.
for
Yes.
months. They've not,
Yes.
some
If-
accounts
yes.
have not been funded.
If that continues for a while, then it becomes a problem. So that has to be fixed. Otherwise, it becomes a problem.
All right, let's try and get back to Dr. Ese Owe in Abuja if we've been able to fix that audio condition. Dr. Ese Owe, can you hear me now? Hello, can you hear me now?
Yeah, it's slightly better.
Okay, sorry for that. I want to ask you, the World Bank has said in the reports that 53% of the challenges being faced by the manufacturing sector in Nigeria is infrastructure related. In the short term, because we know that we have a master plan of a 30-year period, how do you think we can tackle these death of infrastructure, by revamping our manufacturing sector and ensuring that things get kick-started? How do you think we can go about it?
Yeah, I think for manufacturing, the most two critical factors for manufacturing. The first is power infrastructure, which, in my opinion, we are on the right track for. Just last week, we successfully privatized the PHC and successor companies. We may not see the impact in the next maybe 3 or so years, but certainly we're on the right track. Should we get power right, it means that our manufacturers are in for a good run. Secondly, we need to get transport infrastructure right, because manufacturers depend on good transportation network to get their finished products to the consumers. So the moment we can get our power issues sorted, we can get our transportation infrastructure sorted, it means the manufacturers have at once stable power and a good network of roads, rail, air, and the last mode, which is the multimodal transport, which can either be the inland waterways or trucking to get their product to the finished market. The good news is that we are making steady progress. There's a lot of room for improvement, but with what has happened in power and with what the BP DG said a few weeks ago on the transportation infrastructure reform, I think that our manufacturers will be better for it. But the minute we fix power infrastructure, we fix transportation and get an enabling framework for competition policy, which is key, because in the absence of competition, you can't really regulate. Once we get those ones right and get efficient industry regulators, then I think our manufacturers are in for a good one.
Okay, we'd like you to hold your thoughts for us gentlemen on the program. We're going to go on a very short break, and when we come back, we'll continue our discussions. We've been talking to Professor Akpan Ekpo. He is the Director General of the West Africa Institute for Financial and Economic Management, and also from Abuja, we've been talking to Dr. Ese Owe. He is the Associate Fellow, Center for Infrastructure Policy, Regulation and Advancements of the Lagos Business School. We'll be right back. You're welcome back. You've been watching Business Morning on Channels Television, home stretch now, and we've been looking at infrastructure financing in Nigeria. What can we do to bring an end to epileptic power supply, bad roads, and all sorts of things that are hampering our developments in the country? And we've been talking to two gentlemen. Professor Akpan Ekpo is the Director General of the West African Institute for Financial and Economic Management, and also Dr. Ese Owe. He is the Associate Fellow, Center for Infrastructure Policy, Regulation and Advancement of the Lagos Business School. Thank you, gentlemen, for still being a part of the program. I'm going to start off with Dr. Owe in Abuja. Can you hear me very clearly now? Okay. I would like us to look at the power sector, which you mentioned before we went on the break. In 2010, we're told by the central bank that over 109 billion naira has been disbursed to finance power sector projects in the country, and we've been told just yesterday by the BPE that over a total of $357.7 million we have to be spent this year alone to revamp the power sector. Now, looking at these figures and going by the need in that sector, do you think it's enough, to get things started?
Well, I think we must commend both the Power Ministry, the federal government, and the BP for keeping the power sector reform on track, the roadmap on track. As we speak, they've realized around, I think, well over $3 billion from the privatization. And the private investors have committed about the same amount in terms of expansion and upgrade over the next 3 to 5 years. When you consider what is our current national budget for capital projects, it's about 1.3 trillion. So what they have committed to invest in is about 30% of our annual budget on a yearly basis. So I think in terms of reform, we are very much on the right track. We've made tremendous progress. The capital injection is something that certainly, if we had left that to the federal government, there's no way we would have invested that amount of money over the next 10 years. It may be a drop in the ocean, but I think it represents a significant leap in our quest for sustainable energy supply. Going forward, I think what we need to do going forward is to get an appropriate framework that would engender sustainability, because for power projects you require huge capital outlay. Unless you have the private sector players having, a bit of a cushion or a bit of comfort on the part of government, trying to give them tax breaks, you give them, reliefs and all of that, they may not be commercially viable. But should we have the right regulatory approach, should regulators be alive to their responsibilities to ensure that while we do not stifle the desire of the private investors to recoup their money, we also ensure that consumers get access to good service. I think the power sector reform is very much on track, and the quantum investment so far clearly indicates that investors have confidence in the system and that we're on the right track.
Okay, Professor Ekpo, I'd like us to look at one option that we haven't mentioned on the program, which is having to raise Islamic bond. It's one of the ways to finance infrastructure in Nigeria. In fact, we have a report here that says that the British government is planning to issue £200 billion, to finance infrastructure in the UK, and that is an economy which is well advanced than Nigeria. Do you think it's a viable option for us at this point, going by these expectations from the Islamic bond market the world over?
Well, I always argue that the Islamic financing is an option which we have to key into. You mentioned the UK want to raise about £200 billion for that. not just UK, Senegal, yeah, Cote d'Ivoire, the Gambia, they're all using Islamic financing for their infrastructure. And Nigeria has the advantage to key into it and raise millions of dollars from that, from the Islamic bond. I think they call it the Sukuk or something. So it's an option which we should key into, we should buy into, and a lot of benefits to be gained from it. So I don't see anything wrong with it, yes.
You mentioned earlier on in the course of this conversation that the public-private partnership is seems not to be a balanced one between the government and the private sector.
Yeah.
What do you think can be done to ensure that there's a synergy and both parties work together and faster as well?
Well, you see, we have a framework already, the Constitutional Commission. All I'm saying is that the PPP, if you don't have on the side of government or in the commission that we have now, the experts and expertise to know how to negotiate so that become a win-win situation, private sector will always be ahead. In that sense, you may end up as a public partner, you may end up paying for the private sector. Okay, so we need people who are very skilled in it to make sure that it is a win-win situation. It's a good option, but you need those who are good at it to make sure that Nigeria gets the benefit, and we don't end up taking care of the private sector. It involves, some of it involves you sign a long lease concession about 25, 30 years, and while you're doing that, every year you're still paying the private investor some compensation yearly. So you need people who are skilled at it. I'm not skilled at it, who can make sure that it becomes a win-win situation, so that at the end of the day, it doesn't become just government subsidizing the private investor. And Nigeria has done very well in terms of having that framework, but we need to train our people in the public sector, those who are engaged in this, so that they make sure that we get the best out of the PPP arrangements.
Okay, Dr. Eseowe, if you're still there, you talked about having a framework for competition earlier on. What do you think should be the components for this framework in the power sector?
Can I get you again, please? It's breaking again.
You stated earlier on about having a framework for competition in this power sector as relating to infrastructure development. What do you think should be the framework? How should that be? What should be the component of the framework?
Okay, thank you. For competition policy, we have two options. We can decide to go the horizontal route, which means we've got a kind of across-the-board framework for competition across all sectors. What that means is that across the board, be it power, be it transportation, be it aviation, you've got competition rules. Another option is to say, get sector-specific rules for power. What that then means is that you look at the specific dynamics of power and say, how do you prevent unfair pricing? How do you prevent collusion? How do you prevent price fixing? For me, the option is the government to make. But I would suggest that given the gale of privatization and private sector participation in our public sector infrastructure development, there's a need for an industry-wide, across-the-board competition policy that takes into cognizance the fact that the primary responsibility of government is to provide infrastructure. And should you have the private sector participating in the provision of infrastructure, we must ensure that citizens get value for money. It is in pushing for the value for money concept that you bring in competition policy. So for me, the options are two. We can either go across the board, or we can say, since we've got power right at this point, let's focus on power and ensure that new investors do not unnecessarily tweak tariffs, do not unnecessarily hike prices. We have the Electricity Regulatory Commission. They should live up to their regulatory responsibilities and ensure that, yes, while we are happy with the new trend, but we also don't want consumers to be shortchanged by the private investors. Thank you.
Right, thank you. Dr. Isewe, and that's where we'll wrap up this interview. We've been talking to Professor Akpan Ekpo. He is the Director General, West African Institute for Financial and Economic Management. And from Abuja, I've been talking to Dr. Isewe. He is Associate Fellow, Center for Infrastructure, Policy, Regulation and Advancement of the Lagos Business School. I want to thank you, gentlemen, for being a part of the program. We appreciate your time with us. And that's where we'll draw the curtain on this week edition of the program, midweek edition of the program, I beg to say. We want to thank everyone out there for watching the program. We appreciate your time with us as well. We hope to see you again same time tomorrow. I am Bolaji Akinwale.